Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. My next guest is Rafik Moore. Rafiq is the founder of Break Capital. It's a vertically integrated real estate investment firm. He has built a portfolio that's over $300 million in assets across industrial, retail, and multifamily properties. His expertise spans leasing, management, construction, and strategic repositioning of underutilized properties to maximize their value and community impact. Rafiq, thank you so much for being here. I really appreciate it.
Hey, thanks for having Benson. Very nice meeting you. Excited.
You too. You were just saying you're getting ready to take a little trip out to Colorado and go to Vail to do some skiing.
Beaver Creek, to be exact. I'm meeting with a bunch of real estate investors for a mastermind.
Oh, very cool. Do you mind sharing what the name of that mastermind is, or is it private?
It's very original. It's called Vail Mastermind. We get together annually. We talk shop. We talk business. Share our thoughts, ideas, and go skiing.
That sounds great. That sounds really good. I want to ask more about that in a moment, but you're the true immigrant success story.
Yeah.
Right. You came to America over 25 years ago to seek the American dream, and you've done all sorts of real estate transactions and different strategies. Tell me about what it's like in this space for someone who wasn't born here.
Well, when I came to the United States in 1998, I spoke some English. It was broken English, but I wanted to graduate with some kind of education. So after working for a year, I got enrolled in the University of Minnesota, and ultimately graduated with the degree in finance, which really helped me with my English skills. But I graduated in December of 2001. After 9/11. So finance industry was in shambles after 9/11.
Mm-hmm.
So my goals of getting a job on Wall Street were sort of didn't materialize, unfortunately. So I started my business. I started my career in mortgage industry as an underwriter. So I came into this as an analyst. Yeah.
Yeah, I started in the mortgage industry as well, but as an originator.
Yeah. I became an originator or account executive after a year of working as an underwriter. So at first I learned how the back end works. And then they gave me a Yellow Pages and New Mexico. And I started cold calling in New Mexico. That was my first stint into selling. It was scary, no salary, all commissions, but
oh boy.
I scared of failing. I made 200 calls a day, and somehow I started closing deals, and it was the best time of my life.
Oh yeah, you hear about people who struggle with success, and a lot of times they don't succeed because they're comfortable in life. So they don't have that, burn the boats at the beach mentality because they can just get through. But for you, there was like one option, right? You had to succeed. You had to figure out that sales thing. What was that like?
Well, my parents are back home, and it was either you survive or you will go homeless because you got to pay the bills, right? You got to pay your rent and car payments and things like that. And so what happens is you kind of get accustomed to a certain level of income. And I was getting about $42,000 salary before I converted into a commission position. I was scared that I won't make it, but eventually, the first month I closed for one deal, and I think I made $4,000 in commission, which was already higher than my salary. Second month, I felt so lucky because I closed on 2 transactions. I closed one with a prior customer, and I closed new with somebody else. And in the third month, I closed on 4 transactions. And I remember telling my boss, I was like, dude, I'm so lucky. I got lucky first month. I got lucky second month. I got lucky third month. And he said this phrase, which I remember now. He's like, dude, you're not lucky. The harder you work, the luckier you get. You just work hard. I was like, oh, interesting. I thought I'm lucky, but I guess it turns out I'm just working hard, and since then I consistently close deals, and it's gotten bigger and better to a point where I went to work for accredited home lenders out of Chicago. I was a Minnesota rep, and I remember on a monthly basis I would make anywhere from $20,000 to $25,000 a month in commissions. I was 23 years old. It was the best time of my life. I've never experienced abundance until then. I was
Mm.
always a, broke student. I would go to garage sales and, buy stuff at Goodwill, ration. And all of a sudden I'm making $20,000, $30,000 a month. I was like, this is amazing. I started traveling a little bit. It was first introduction to the world of abundance.
I love it. Yeah, it's those skills though, those sales skills are some of the most important in business, right?
Absolutely.
Because you're always selling, even if you're not selling an actual product, you're selling yourself. And that skill set can go a long way. And especially now what you're doing, like you're selling these big deals, you're raising money likely, you're talking to all of these, you're going to be in Vail here in a week or so, selling yourself and more to add value, right? Which is
Well, yeah,
there's a
the
side
concept
behind
of
you.
selling it does somehow has a bad connotation as if you're taking advantage of somebody. I look
Right.
at it differently. My approach is to always add value. I play a long game. Every deal is merely a down payment on the next opportunity. And when you position your mind to always add value, all of a sudden you become a person of value for people you work with, and they want to continue doubling down with you and investing capital with you, and that's been partially what caused my portfolio to grow and my network to increase. And I've created a value add network. It's a community of value add investors across the United States. And we collaborate, we do deals together, we raise capital. It's a pretty amazing group of people. If you are interested in joining, or if any of the viewers are interested in joining, please DM me. You can find me on YouTube or Instagram, and I'll be happy to invite you guys to the group. It's pretty amazing.
Tell me about the group. What is it about? Is it a bunch of like-minded individuals, real estate
Imagine a
investors?
so imagine a group of friends.
Hmm.
It all started with a group of friends. We get together, we do deals. Somebody has a deal, somebody has capital, somebody has time and energy, or found a deal in his market, and we collaborate. We add value to each other. This value add network is designed with the intent to create a culture where everybody wants to, first and foremost, help each other grow. So there is no cutthroat, dog eat dog type of thing. We're really friends, and I've expanded it to friends of friends now, and opened a community on Telegram. I'm going to have a school community. I do a little bit of coaching too. I help people understand creative financing, how to control millions and millions of real estate with little or no money of your own, because I'm a capital raising machine. And if you have the value add approach, you will create a situation where people always want to invest with you. And so, having adopted this mentality, having adopted this philosophy, I've parlayed it into the network, and now network, there's over, there's millions and millions of dollars in the network of cash, and there's a bunch of deals. And our job is to kind of get together on a weekly basis, talk shop, and help each other elevate. So it's a pretty awesome community.
Yeah, it sounds like it. It could be difficult operating in a silo when you're a
Right.
solopreneur, and there's the ups and downs of business. They can can be pretty nagging, right? When things just aren't going the way you want them to. But if you have a support network around you of people who are going through the similar things, you can bounce ideas off of each other and be there just to support each other and also hold each other accountable.
Course. It's an accountability thing. It's a place where people see what other people are doing and gives them energy. If he can do it, I can do it. If she can do it, I can do it, type of thing.
Hmm.
Also, resource sharing. Somebody might have a line of credit. Somebody might have ability to put money down. Somebody might have a deal but short on cash. And so collaborating and creating a infrastructure to help each other, and also having the mindset of first deal is a down payment on the next one. not focusing too much on the money, but focusing a lot on helping each other grow is where I think this is a super powerful group.
Yeah. Yeah, I love that idea. Um, so you mentioned creative finance, and you don't hear a lot about creative finance in the syndication world, or
Yeah.
whether it's industrial or commercial. You heard a lot about with single family properties. Is it different in this space, or is the concept the
Same thing.
same?
Same thing. I have flipped and worked on over 500 doors in my first stage of my evolution after 2008, 9, when mortgage business collapsed. I started flipping houses full time and got into some apartments and built a portfolio of about 80 doors. And then I met a mentor and he says, look, you should get into commercial real estate. And to me, I was like, well, commercial real estate is big money. I don't have 500,000, $1 million to put down. He's like, no, I'll teach you how to do it. You don't have to actually put money down. All you got to do is leverage, leverage other people's capital, time, money, and find a way to add value to them. It was a pretty new concept. He says,
Mm,
Rafik, you have to be generous. You have to make sure everybody makes money. And you want to make sure everybody makes money first. And then you can make a little bit of money. If you allow people to make money with you, they'll be hooked and they'll keep coming back. And you will be able to control millions and millions of dollars of real estate with other people's money. And so on the first deal in 2013, I bought a warehouse building. Never bought a warehouse until then. We made $1 million. I've never made $1 million until then. On average, flip a house, make it $30,000, $50,000, lucky to make 80. And here we made $1 million. Like, what the hell is this? Bought a shopping center, made 900,000, bought another industrial property. Before you know it, I realized that if you keep flipping them, you have such a huge tax liability. So I started refinancing and keeping the portfolio, and I had a small management company. Of course, today we have over 4.5 million square feet of real estate, and I've been very, very lucky to have met a lot of amazing people along the way, but also been a very amazing partner to help my investors double, triple, quadruple their money on value add deals in real estate. And all I did is apply the same hustle we applied in buying houses at the velocity of it was pretty high. We did 50, 60 houses a year. Same thing to commercial real estate, but then I just added another zero to capital raising. So I now teach this class. I do coaching. And
mm.
like today at 4 o'clock, which is 3 o'clock your time, I'm gonna coach a class on how to work with senior debt lenders and how to get lenders to finance 100% of your deals, sometimes creatively. It's gonna be a pretty exciting class.
That sounds really good. Can you touch on that a little bit? Just like
Right.
tease us what this class is about.
So every Monday at 4 p.m., and sometimes it will probably deviate, I have a coaching class. It's a Zoom call. I'll have about 60, maybe 70 students now. And I break down a concept. I talk for 20, 30 minutes. And then we do case studies and we do deal pitching, Shark Tank style. And so last last week we did how to raise capital like a pro. I have a recording of the video if you'd like to watch it. I'll send it to you. And then tonight, we're going to talk about how to work with senior lenders to get them to line up to finance your acquisitions.
Mm,
And today I'm going to talk about how to structure a PFS, how to put together your global cash flow, how to position yourself with lenders and partners to make sure that they will pre-approve you for certain deals so you don't have to shop after you found a deal under contract. One thing I've learned is that you need to always borrow money when you don't need it.
mm,
So I always submit my PFS. I have a full package with the PFS, with a couple of years of tax returns, copy of the credit, and verification of funds to a bunch of lenders. I'll say, hey, I'm looking for a $3 million deal. Would you be able to pre-approve me? And so I get 3 or 4 approvals, but they never pulled my credit. They used the credit I provided. And then I go shopping, and then when I have a deal under contract, I have lenders fight for my business. But also I triangulate with a private equity or private companies and partners. And in negotiating, very often we involve sellers in funding our down payment. And so
mm.
Like we have $25 million under contract right now. I think I personally will put about $2 million, and about $5 million will be raised through sellers and investors. And yeah, we're buying 5 properties right now. One in
Wow.
one in Milwaukee, one in Chicago, two in Cleveland, Ohio, and a 100,000 square foot warehouse in Minneapolis. I have a YouTube channel, by the way. I talk about my escapades. There's lots of videos you can watch. It's pretty entertaining.
What's it called? Did we just search your name?
Yeah, it's called Rafik Moore Value Add Investing.
Okay, we'll check that out. We'll make sure to put a link in the
Thank
show notes as well. So your firm and you specialize in identifying and enhancing undervalued commercial properties. What's like a classic deal that you would just love that would kind of describe this process?
So my business is I sort of serve as a conduit. Like I'm a platform. I got my daughter, 20-year-old daughter, constantly finds houses, and she's got about 60 doors now that she is managing running. So she's got a property she bought for 260. She's going to spend 40 grand on it and maybe 50 grand on it and sell it for 450, 500,000. So I do a little bit of houses through semi conduits. I'm a sort of lender and a capital partner. My personal business is industrial real estate. I love doing industrial because it's a hot commodity, because it's fairly easy to manage, and we've had a lot of experience in that. That's probably 50% of our portfolio is industrial. And then about 25% of our portfolio is retail. We decided to pursue retail when industrial became really hot, but as you know, retail has fallen out. And so we started buying retail because you can buy them at pennies on the dollar, get in there, clean it up, and stabilize it. And we don't really do a lot of retail tenants because we don't believe retail works, but we do medical office. We'll do gyms. We'll do some
Mm.
Amazon type shippers, right? Shipment companies and restaurants and stuff. And so we picked up, for example, 86,000 square foot property in Chicago for 4.2 million. We're going to spend $3 million on it. At $7 million basis, the value is 12, and we're going to refinance, and it's going to, generate about $1 million of NOI. So it's worth about $12 million. And so these types of deals, we buy, fix, and either refinance. Most of the time we refinance, but sometimes we sell them too. And when we
Mhm.
sell them, we realize a profit and 1031 into the next deal. So it's an exciting type of business. We always add value, and our saying is we improve everything we touch and elevate everyone we collaborate with as a network. That's our mantra.
What do you think about office space?
I didn't finish. So about 10 to 15% of our holdings are office, some multi-story, but mostly single story. I believe office has tremendous potential right now in the value
Mhm.
add space, especially single story office, because it's so distressed and everybody's so scared of it. But just like, when nobody wants to buy it, it's like as a contrarian, you want to go in there, clean it up. And again, if it's a single story office and you have outside entrance, it's your flex space. It's like a retail space, or it's a flex light industrial space, as long as you can remove ceilings. And so we're actually buying a 50,000 square foot office property in Wisconsin right now for 3.5 million. Get this, it was appraised for $6 million just 3 years ago. And right now we're buying it for 3.5, but in place NOI is 330 with a 30% vacancy. So it's got a high cap rate on in place, but people are scared, and we're buying it from a lender because the seller is not well health wise. So he decided to
Mm.
get rid of it. So
So the value add on that is to lower the vacancy and do some slight improvements like deferred maintenance.
yeah, clean up the parking lot, cut in garage doors in the back to convert
Mhm.
some of the office spaces into flex spaces. And once it's stabilized, it will generate about $450,000 of NOI. I believe the value will be close to 5.5 million.
Very nice.
Yeah. Would you like a deal like that? I can show you how to do it. I'm sure they
Yeah, I would love to. Yeah, those are exciting. I haven't done any commercial type deals yet. Multifamily is what we're starting off in with our fund.
yeah,
Um, because it's there's less of a difference to single family with
very close.
multifamily. It's just a bunch of them together, right? And then it's easier to measure. But with commercial and industrial and office, like the measuring stick's different.
Little different, yeah. At the end of the day, the formula is all the same. It's all about cap rate and NOI, but yeah, there's levels of complexity to how that game is played. And yeah, I've been so blessed to have learned that game about 12, 13 years ago from my mentor.
Mhm.
It just totally added a whole different element to my acquisition strategy. I still do apartments. We did a 95 unit apartment building in St. Louis about 6 months ago. I have a 45 unit apartment building in not too far from here in Wasika, another 45 units in another town. But apartments are much harder to manage. There's just so much more maintenance and management. Industrial, you sign a 5-year lease, it's triple net. Tenants pay for all the maintenance. It's just so much easier.
Oh yeah.
Yeah.
With apartments, you just think about all the plumbing, right? All the bathrooms, all the kitchens, all that stuff breaks and goes bad. And if you got office, there might be one or two bathrooms in the whole place, right? There's a lot
People
less that
sleep
can go
there,
wrong.
so they spend more time. Most of the offices and retail people are there during the work hours, and then most of the time it's vacant, like or evenings and nights it's vacant. So it doesn't get abused as much as residential.
Right.
So
Yeah.
yeah.
So you're doing a lot of this into light industrial right now, and you're I guess is your portfolio shifting at all based off of like what's happening in like the current state of the politics
Economy.
and the economy? Is anything shifting there? Or do you plan on keeping those ratios the same?
Well, our whole thesis is value investing. We respond to the market trends and try to invest in assets that are underutilized or distressed. So for that reason, um, we use a lot of demographic data to make a buy or no buy decision. Like we need to make sure that there is 100,000 people in a 5 mile radius. We want to make sure there's certain household incomes in the area so that we know that there's discretionary disposable income people have. And also, we want to go to towns that are not shrinking. We want to make sure there's growth in these towns. So there's multiplicity of decisions that we have to do. But then we buy, like I'm buying an office building right now in in Chicago, and the rents are below market. And it's a single story office. It's probably worth 1.5 million, but picking up for 850. And all we need to
Hmm.
do is clean it up, paint it, and you can increase the rents. But if you were to buy an apartment building of that size, it would be 20 unit apartment building. It's impossible to buy a 20 unit apartment building for 850 nowadays. It will be at least 2 million bucks. And so then
Hmm.
your margins are much thinner.
Yeah.
So
So there's two trends that are happening right now that could affect on how we invest and what we invest in. One of them is the thing for people to go back to work, right?
yeah.
Less remote work from home, more go back to the office, right? And then the other thing is bringing manufacturing back to the U.S. So a lot of companies are starting to talk about let's invest in the U.S., right? Japan, other countries. We're starting about talking to invest back in the U.S. to bring jobs stateside again. How do you think that's going to affect your strategy moving forward?
There's so many macroeconomic trends. There's a huge fear of what AI is going to do to everything.
Hmm.
Zoom culture with COVID-19 created tremendous amount of distress in the office markets. COVID-19 created a lot of issues. As much as I'm nervous about the big trends, our main investment thesis is to go into a market, identify a distressed asset, and undistress it. So picture Minneapolis or Denver, you get the market and everything is trading at $100 a foot. In order for us to make that buy or no buy decision, we have to buy it at $60 to $70. And so we always look for situations where properties are trading at a discount. it's going back to value investing thesis from Warren Buffett and intelligent investor. Of course, they apply that in to the equities and stock market, but we use the same thesis in real estate. And of course, that's why we have a construction department. That's why we have a leasing department, because most of the properties we buy, they have 30-40% vacancy. They have deferred maintenance, and we improve these properties and stabilize them. So I'm always looking at macroeconomic trends, but on micro level, if I buy a building for 4.4 million and neighboring properties would sell at about $8 to $9 million, like this industrial building we're buying in Cleveland, that's a hot deal. And from doing houses, you flip a lot of houses. You know how do you feel when you got a deal on a contract and you know it's going to sell for 500,000 because everything else is selling for 500,000 and you got it for 250? That is the
You're feeling
most
pretty good.
exciting feeling you get from finding a deal and locking it up. That's the stuff we do. And we do mailers, we do cold calls, and we look for basically properties that need help. And they're not as easy as apartments to stabilize. So that's why we're not doing a lot of apartments. It's just apartment. There's not a lot of distressed apartments, at least not yet. There might be more apartments falling out because of the interest rates.
That's what I was going to say. Maybe not distressed, physically, but there's a lot of loans that are coming due soon that have balloons on them
Yep,
that are going to be back into the pool, and these lenders are going to have to sell them at a discount to get them off the books.
that's right.
So are you
Yeah.
are you already planting seeds with lenders like, okay, right, when this starts happening, you know who to call, right? Is that
Yeah,
part of the game, is to really, what's that?
it's part of my sort of a sales pitch. I was talking to a lender just last week. I met with somebody, closing. There was a closing where you financed, and I said, hey, if you have anything in REO department, if you guys are taking anything back, let me know. I'm happy to get in and I can manage for you guys. So this banker says, yeah, we're working on a couple of office buildings. We have a ramp downtown. I was like, whatever you guys need, I'm there. I'll jump in. I'll manage it. I want an option to buy, but I'll stabilize it ahead of my buy-in from you guys. So
Mm.
we do a lot of that. We manage properties for our banks. We manage properties for distressed tenants. I mean, distressed owners and stuff. That's our business. So
I can see there's an advantage to, getting into the deal before it even goes back to the bank. Like
yeah.
if there's a seller, or not a seller, but an owner who owns a property, and rather than go through the whole process of foreclosure and the bank taking it back and it becoming an REO, you could work with that owner to maybe just assume the loan, take over
Yeah,
payments.
buy the notes. We can buy
Right?
the notes, or we can have the note assigned to us, and we get a deed in lieu of foreclosure. I mean, there's myriads of ways to untangle the mess. The problem with banks, they don't have the wherewithal or systems to stabilize these assets. So for them, working with companies like us is a blessing because we can jump in and work with seller, maybe give seller some capital to walk away. Otherwise, if the bank took it, they would get nothing. And there's many ways to skin the cat or get the deal done. And we try our best to make sure it's a win-win situation for everybody.
Yeah. Yeah, that's the key. I like that win-win approach, because there's certainly opportunities for people to take advantage of others, because they're desperate in a lot of cases, right? So they're willing to
That's
walk
why we
with,
call it always adding value and not, even with people who lost their deals, we always try to figure out a way to get them whole. And sometimes it's involving them in the deal for small percentage of the winnings. There's many ways to to create a situation where everybody wins.
yeah. Yeah, what comes around goes around, right? That whole concept of karma. But, is part of that approach something that you learned? Because back in like 2008, I think it was, you had some hard times financially, and
Yes.
you were able to get out of it. Did somebody help you, and that's why you want to help now too?
Well, I did not have a guy like me helping me out, so I had to foreclose on a bunch of my properties, and then I did many of them in with a deed in lieu foreclosure. If somebody had a facility to take over my loans and gave me a runway, I would have been able to, retain much of my asset base. So now I want to create a situation where I can help some of these distressed sellers to realize, the value. Of course, we make some money too. We're not a Mother Teresa business. It's a for-profit business,
Hmm.
but at the same time, we try to be fiscally responsible and accommodating, and not just like sharks. We try to be more of dolphins and help people, but also get paid a little bit as well.
Oh yeah. A lot of people are scared of another downturn in the market. And someone who's been through that, what's something you learned the hard way that today's investors need to know?
One thing that I realized, of course, hindsight's 2020. These downturns are cyclical, just like waves in the ocean. Things go up and things go down. Um, had I not been depressed, had I not been so consumed by negativity, I would have been much more agile in coming back. One thing that I know now is no matter how bad it gets, it always comes back. And it's those who are positive and optimistic at the bottom that win really, really big. And next time around, if it happens, I would like to stay positive. I would like to stay creative and try to utilize my resources to help stabilize whatever assets I have or I'm working on, and not be consumed by the sky's falling mentality. Oh, everything's bad. I remember how I was consumed by the negativity, and I went into a shell, and I would drink a lot of alcohol, and I was just depressed out of my mind because I lost my business, because I lost my family, my dad died. And instead of feeling sorry for myself and being depressed, I should have been positive. And there were so many opportunities right there in front of me, but I wasn't in the right my mental state for it. So I know it's hard because life beats you up when things are bad. But if you stay positive, I think you'll win in the long run.
Yeah. Yeah, it's for a lot of people, like their happiness is attached to how much success and money they have. But then you hear those stories about successful people that are unhappy,
Mhm.
people who have it all, but are still doing the drinking and the numbing and all of the things that they would do if they were unsuccessful or didn't have money. What's the truth about money and happiness?
So we attach our identity to our success, and I'm guilty of that. And when I was on a losing end, I was a successful guy, and all of a sudden I'm losing my house, I'm losing my cars and everything. It really, really takes a toll on your psyche. And I read a lot of books on Buddhism, and I love Dalai Lama and how he approaches things. And as I'm getting mature, I'm 47 now. I would like to. I realize one thing: happiness and joy is an inside job. It's in your head, and I practice all the time to try and stay positive, regardless of what the problems are. And I mean, we deal with problems all the time over budgets and non-paying tenants and a bunch of stuff that happens. And but keeping your mind crystal clear, meditating, and not attaching yourself to success and money and material things is such a powerful thing. And I aspire to be like Dalai Lama in that sense. I mean, if you think about this guy, he was kicked out of his country, Tibet, and exiled into India, and he walks around with a smile, and he's not resentful. And when Desmond Tutu asks him, "Why are you so joyful? How come you're kicked out of your country and why are you not morose or unhappy?" He says, "You have friends in life, and these friends are always around you. You don't learn anything from your friends because they're just there. They don't make it hard. But then you have some special friends, and these special friends create a lot of chaos and distraction for you, and they make you a better person. So I'm grateful for Chinese who, did this for me because they made me a more grateful, more joyful person because they pushed me to my limit in learning about who I am. So when I heard it, I was like, dude, this is genius. But also, it's so powerful what he says. I don't know. I'm. We'll see. I mean, it's easy to say these things. It's hard to practice, but that guy is a pretty amazing
Well, it
leader.
sounds like you've been practicing a lot of these for the last 25 years, and it's led you to a point where now you've got a $300 million real estate portfolio.
Yeah.
Um,
I don't know. It goes up and down. Um, my marketing person said 300, and we bought a whole bunch of stuff. We sold. I don't even know. I know we're 4.5 million square feet right now, but it's a nice round number. But yeah, the one of the things I learned is not to push the portfolio value, but really focus on the cash flow and cash, because you can get carried away with numbers. But yeah, I've been very blessed. I'll tell you that right now.
yeah. Looking back, of all the deals that you've done, was there ever a deal that just completely humbled you where you thought, oh, I might lose everything because of this deal?
One of the things I've learned from 2008, 9 is to never bet the house. So, and I've been so distraught by that experience, by losing everything, that I was extremely, extremely careful coming back out of it. While I've never lost everything, I've had some deals that really, really rattled my mental state because I lost money on them. But one thing I've done is if I had investors in the deal and I lost money on it, I've always made them whole. I've always said, look, here's your money. Here's your preferred return of 8% or whatever. I'm sorry, I'm lost money on this. I'll take it out of my next deal. Like I'll just cover the losses. But as a result, I've been able to build a really good base of investors who kind of believe in me and stand by me. And of course, we don't lose on more than 1 or 2% of our deals, but sometimes it happens. Like I lost $250,000 on this one deal and about a hotel. Like, what the hell are you doing, Rafik, buying a hotel? You're not a hotel operator, but the building was so beautiful and I was enamored by it. It was a old turn of the century mansion that was turned into like a bed and breakfast. And I, as a result of that building, I bought a building next door, which will make a lot of money on. So in the end, it all will work out. But I've been beating myself up about buying the hotel and saying, "What the hell are you doing? Why did you buy a hotel?"
Yeah, you got outside of your investment thesis,
Yeah,
right? There's a
yeah.
reason why we have that. It's so we can keep us on the right path and not be distracted by all these exciting opportunities that come your way. Because now with this network you have, there's probably people that want you to invest in their businesses as like a venture capitalist, and there's all these opportunities. There's crypto, and how difficult is it for you to just not put money in these other opportunities?
Well, one thing that I learned from my dear mentor, Warren Buffett, in the beginning of your career, you have to be a yes man to get to a certain level of success. You got to look at every opportunity and really build your net worth and your expertise. But then you almost have to reverse the trend and become a no guy and say a lot of no. So I'll tell you unequivocally, my successes in the next 10 years will not be a result of how many yeses I'll say, but how many no's I'll respond to. And so if I say no to everything that is outside of my area of expertise, I can tell you one thing. Every time I invest in an industrial property with a value add approach, it's always a moneymaker. It's always, we always win. It's just, we are so good at it that it's almost hard to lose money on it. But then you deviate, you buy a mall, you buy a mill, you buy a hotel, and that's when it really gets kind of stressful and potentially you can lose money on it and stuff. So I I keep reminding myself to be a no guy and say a lot of no's and not really, respond to a lot of yeses.
So that being said, is there one thing that you wish you knew more about so you could be more confident and maybe add it to your investment thesis either now or in the future? Is there something that you got your eye on that's interesting to you?
So I am looking for a really good hotel operator who shares my values, who is so good at hotels that will say, "Look, Rafik, hold my beers, get out of my way, I got this." And I know beauty of hotels is that they are not just a building, they're business in the building. And so your ability to increase NOI is so much related to your operational excellence. So I had to start all over again. I probably get into hotel business, although it's also fickle. But having a base of industrial assets, I would probably put 20% um, of our capital into hotels with a really good operator. I don't think I want to learn it myself and run it, but if I had a really good operator, I'd probably bet on hotels and build a portfolio in the next 10 years.
Do you think that there's an opportunity there because of what's going on a macro level, or is it just something you're interested in, or you've noticed that there's a trend that's going to make hotels a good ROI in the future?
I think there's a huge difference between the stressed hotel value price and the value when it's stabilized. So I see that hotels have a tremendous upside based on the fact that it's not just bricks and sticks. It's mostly a business inside of a building. So I've seen many people just kill it in the hotels because they're really good operators. So I see an opportunity um, in the hotels for that reason. Not macroeconomically, although macroeconomic trends are pretty strong too. And like going to Florida and Atlanta and Texas, I think there's some boom going on. People are
Yeah.
moving down there. So I mean, Denver hotel would be great too. I love Denver. I love going there to visit. So
So you're originally not from the US, right? And was it Uzbekistan?
yeah, I'm from Uzbekistan, former Soviet Republic. So when they
Right.
scream from the top of their lung that they want socialism and equality, I'm telling you, man, it's not as good as it sounds. On paper, it looks good, but look at Venezuela, look at Cuba, and there's no new way. Socialism kills the economic engine of any country, and all it does is create elite class of bureaucrats that are like cancer. And they like 0.001% will be absolutely like a billionaires, oligarchs, and the rest of the population will be starving, eating rats and mice because they won't let any economic enterprise to survive. And so these people are confused, and I hear about these democratic socialists of America, and I'm scared because they've never experienced what it's like to be in a socialism, and they think there will be better, more fair system, but it won't be. I think this right here is the best system. We just need to improve it. We need to improve the output and technology and create a system where uh, more people benefit from it. I don't know. Like, I'm not a politician, but I know one thing. Socialism does not work because I grew up with it. I grew up with the lines for bread and, uh, uh, you know, 40% unemployment. It sucks.
So you must have an opinion then of what's happening within the Doge world, right? Going in and,
Yeah.
trying to take out the corruption and the overspending and, really making these government um, offices more efficient. What's your position on that? This is a business question, right? This isn't a politics question.
For the past 5, maybe 10 years, I've been really, really kind of worried about the government spending and deficits that we experienced. And I thought this country is going to hell in a basket with all the spending. And of course, now that Elon Musk, who is one of the smartest guys on the planet, is in it, and he's not in it for the money. He's already got all the money. He doesn't, what does he need? He just wants the world to be a better place, and he wants to, he's a very value-driven individual. I really hope he's going to have enough time within 4. It's not a lot of time, 4 years, to really clean up and shrink that budget and stabilize this mess. I mean, Pentagon. Didn't they like, couldn't they find $1 trillion? And then what's going on with USAID? I mean, all these people that are just taking money and they don't care about the country going down because they just benefit their personal pocket. And
Yeah,
so
the opposite of a win-win,
yeah,
right?
totally. And
So these
there's
people that
nothing
are pitching this concept of socialism are the ones that are in power, right? Because they're the ones that benefit, but it'd be the average person who would see the negative effects of a socialist society.
in 1917. This happened in former Russia. Soviet Union was created as a result. It happened with Fidel Castro. It happened with Maduro. I mean, socialism will never work. It's a system that does not work. We have the best system. We don't have the perfect system. I think we need to work on improving it. But socialism is a wrong way to go. It will just lead to a lot of poverty,
Yeah. Yeah,
unfortunately.
it's unfortunate, but it's going to be an interesting 4 years.
Uh,
And I think that a lot of the changes that are happening right now with Doge is going to have a trickle down effect, put more money in the pockets of Americans. We can invest more, we
Hopefully,
can
no
do more
inflation.
deals.
I mean, he definitely speaks very, very eloquently about that. And it's like, look, if we shrink this budget, we don't have inflation, and more people have more money and stuff like that. Because I paid so much in taxes last year; it was crazy. And my tax liability is huge because I get in and get out of assets. But I was always leaning Democrat, always, because I came from poverty. I've always voted for Obama, but this time around, when I realized what's going on, I saw the whole other side of the equation, and I see now what the Republicans were talking. Of course, I hate the lying. I hate the posturing and gimmicks and stuff like that, political gimmicks. But at the same time, the biggest challenge we have, and I don't want to go too much into politics here, is hopefully they'll clean up the act and reduce the government spending so we can have a
Yeah.
better. I want
Yeah, I
better.
think it's happening. I think there's some moves happening right now that we're going to see. And I think over time, it's going to have a positive impact on our economy and, everybody will be able to benefit.
Um,
Um, but Rafik, we had a great conversation today. I could talk all day with you. We covered a lot of different things.
well, thank
Um,
you for the invitation. Yeah, it was great.
yeah. So you mentioned your YouTube channel, so people can go and find that.
You can
And
find me on
then, if
YouTube,
someone wants to
LinkedIn.
work with you, either investing with Break Capital or one of your other companies, how can they find you?
So my website is www.braidcapital.com. You can find me on Instagram, Rafik Moore, on LinkedIn. You can DM me. I'm happy to respond. Um, I have Value Add Network, a network of real estate investors that is kind of like a mastermind, and I do coaching. But yeah, I mean, my approach is to really help elevate and inspire others to achieve their highest potential. I really draw a lot of energy from seeing my junior associates win. So somehow my brain is wired to celebrate when others win, and that's why I get joy and fulfillment from helping. Like when if I make $1 million, is whatever, it's not going to change my life. But when I see my young entrepreneur, associate make a lot of money or build financial freedom, I get lit up because it sort of vicariously reignites um, my drive and desire, to elevate. I get really excited when others win. So that's why I think I see myself as a coach, as a mentor. I'll have a mastermind, and I'll make a lot of like one of my missions in life. I think the main mission now is to help 100 people to elevate to $100 million portfolio. And $100 million portfolio does not seem like it seems like a big portfolio, but it's not. In commercial real estate, it's about 10 to 15 big deals. I mean, $5, $10 million deals. And you can do that in 3 to 5 years. And
Mm,
I already have one student who got to 120 million. I have a couple of students at about 50 million now. So I'm just in the beginning, but I'm only 47. So by the time I retire, I'm sure my mission will be to get 100 value add investors to have $100 million portfolio.
I think it's an amazing goal, and
Yeah.
I have no doubt that you're going to accomplish it. Right?
Thank
You're
you.
going to live past 100, so you got the other half of your life to get those people. You're going to have to raise the bar and turn into 1,000 people.
Well, we'll see. I don't want to be like speaking crazy, but I know based on if I live another 20 to 25 years, I think 100 is a pretty nice, comfortable number. And the other thing is, one thing I realized is I work way too much. And it's like, dude, I gotta go travel. I want to grab my wife and go to Italy and live there for a year. So, or for this one, we're going in July for a month. But I want to experience world and just not be constantly traveling to see my buildings.
Right.
So, yeah.
Well, it's been good to get to know you a little bit, and very happy you had a chance to come on the show. I really appreciate it.
Thanks.
Thank you.
Thank you. I appreciate you. Yeah. And so, are you with Avesta, right? You started a fund.
I
Is that what?
did. Yes.
Yeah.
Yep.
Beautiful. Awesome. I'm actually going to going there tomorrow. I'm gonna be onboarding with the crew, Avesta crew.
Oh, in Portland.
Yeah. Have you done that already?
Yeah, I was out there about a month ago.
Nice.
Got a chance to hang
I
out with the
think it's
team
gonna
out
be
there. They're wonderful people.
yeah. I like how they're very dialed in, very, very smart guys. Well,
Yeah.
anyhow, this has been great. Thank you very much. I don't know. The energy seemed like a little not very exciting, but it's okay. We don't have to always be energized, right?
Yeah. I mean, when you're talking about real estate, it can be exciting, but some of it is just kind of mundane, right? We're talking about, numbers and, value add, and that stuff isn't always, going to get people super excited. But this is the part of the goal for this is to educate people, inspire people, give them ideas, get some connections, right? Hopefully we can find some people who want to work in your world with you as well. So
And do you have a
thanks
YouTube channel?
again.
Where do you post these?
I'm sorry.
Post these on YouTube or where?
We post them all over the place. So we've got two audio only platforms, Spotify and Apple Podcasts. They
Hmm.
go up on YouTube, the video portion does, and then we chop them up into shorts and reels and put them up on TikTok, Instagram, Facebook, YouTube. So
I'll
we
find
distribute
you
these
and
all over the place.
yeah, go. Yeah, thank you. We are starting a little podcast ourselves. It's kind of new. We just did one episode so far.
Very cool. Well, if you need any direction or advice on that, I'm happy to share with you what we know.
I love
We
your
can talk
name
about
though.
that.
The name REI Hackers. Like we are hackers. We hack deals all the time. So when I
Yeah.
saw your name, I saw like a resonance. And if there's any way I can add value to you and collaborate, if you find any commercial deal or anything in your market, need capital, need any kind of a help, I'd love to jump in and do stuff. My friend Kevin Amolsch lives in Denver. He's got a Pine Financial,
Yeah, I know
hard money
Kevin.
lending. You know Kevin?
Yeah.
Kevin is my good friend. He's in my mastermind. He's going to be in Vail on
Oh, cool.
Small World.
Yeah, he may not remember me, but I know Kevin. We've talked before.
Yeah. Anyhow. Well, yeah, Benson, thank you so much. I really appreciate you.
Yeah, I appreciate you too, and I appreciate everybody listening. Keep an eye out for really amazing guests like Rafiq on future episodes of the REI Hacker Podcast. Thanks for listening, and we'll see you guys next time. Take care.
Thanks. Bye.